Good morning, members. It is Friday, June the 7th. Taking a look at the charts, we've got the bar chart momentum page here. If we look at the NYSE stocks, we can see yesterday we had a pretty strong advancing. It was pretty strong selling in the morning, but it quickly reversed once we filled that price gap. I sent a chart out yesterday afternoon showing that gap window more or less getting filled. We had complete panic in the morning. It was pretty much all sellers, and then it jumped in. We saw a big buying step in. It was about 5-to-1 buyers yesterday. So that was a good sign, seeing that stocks were getting accumulated once we filled that void. Taking a look down at the momentum index, the bar chart momentum index. Yesterday we had a pretty strong rally off the lows. Anything over the 101 is considered to be overbought. We actually closed pretty strong yesterday, pretty much at the 101. Now we are in an uptrend, so I'm not expecting the market to really pull back. It might pull back a little bit today, but overall, if this was the bottom put in yesterday, then we'll probably see this chop around in the upper end of this range between 100 and 101 for a little bit, and we'll see the market continue to move up day after day here as everybody who was short is now starting to cover the shorts. Everybody who got spooked out starts to become bullish again and wish they didn't get out at the lows, most likely. So all that will feed the market, and we should see a multi-day run to the upside in equities. Now, taking a look at stocks trading above the 20-day moving average, we've come down. We're coming right down to a key support zone, which is this 25 area. Anything down in this zone here starts to become very oversold on the intermediate basis, meaning we get a multi-week move to the upside. Or a multi-day anyway, a first initial thrust, then usually you'll have see some type of pause, and then you'll get a continuation. But you can see when we've come down anywhere down into this lower zone here, excuse me, we've had a very strong move to the upside. And so far we've seen a nice three-wave correction down here and a nice reversal yesterday. This could chop around. We could see it still try and continue to form a base, a bottom in the SP500, the broad market in general. But overall, we're getting down to these levels here where money is starting to step back in because there's just too many stocks are trading lower. Now, if we take a look at stocks trading over the 50-day moving average, we came down yesterday very close to the 50% level. This is a pretty key zone when stocks come down to touch their 50-day moving average. You see a lot of institutions, you see a lot of people following that moving average, and a lot of people buy. So we came down very close to that level yesterday. Price got bought back up. And for all we know, we could see a couple more days pulling it back down a little bit lower here. But overall, I think most of the downside risk has been flushed out of the market. We saw a lot of panic the previous day, and that is an signature sign that we're getting close to a bottom here if we haven't put it in already. Now, taking a look at the charts, here's the US dollar index, the weekly chart. You can see here yesterday price really collapsed. We pulled right back down into the middle of the range. Now this is the weekly chart, remember. We pulled back down into the middle of this range, and then the dollar pretty much went into free fall mode, and it pretty much had a little mini crash there. It really sold off hard, and that final big drop in the dollar, just the falling dollar naturally lifts commodities. So we saw precious metals move up and push to a little bit of a new high yesterday. Overall, it's coming down. It's down in the support zone, and this morning it's still holding that level. And we're seeing precious metals down a little bit this morning, giving back some of yesterday's gains simply because the dollar is now oversold. It's at support, and a bounce in the dollar is usually bearish for precious metals. Now, taking a look, let's just jump right into the precious metals first here. Here's the gold chart. You can see if we just zoom in, we had a pop yesterday. It spiked up high when the US dollar went into free fall mode there, and then it's pulled back a bit. Overall, the gold continues to kind of trade in this downtrend. It's trying to hold up, but it's still more or less a bear flag. We have seen some buying volume step in, but overall, a lot of move to the upside here. We need to see some pretty strong bullish price action before the trend actually reverses. Now, taking a look at the silver chart, pretty much the same thing. Silver moved up yesterday. It's kind of been grinding. It's holding its way up there. Gold and silver down about 1/3% this morning. Nothing significant. Silver has pretty much been trading sideways, and gold has been drifting higher to sideways. Looking at gold miners. Gold miners obviously got a lift yesterday with the weak dollar and stronger gold. We saw miners come back up. We're now coming right up into this pretty more this moving average here. We've got key resistance from these previous levels. We got this kind of gap window. We've got the previous pivot high, another pivot high, another pivot high, moving average, and overall, I got a feeling we're going to see if we get a strong pop here and we get some strong volume and a bull flag, then I will think we'll have started to form a bottom and we'll be looking to get long. But overall, we're still at resistance, and the equities market looks overall ready to rally, which means we'll probably see money flow back out of gold and gold miners and see them go down. And we'll see the equities market, the SP500, NASDAQ, and things continue to move higher, at least for a bounce that could last a week or so. Now, taking a look at the bond chart, we saw some fear creep into the market more or less this week with all that volatility. More or less, we got this kind of down channel, this down trend or down channel. You can draw it in here. We've been ping-ponging around all the way down. We started to see some fear this week, so we've been seeing higher lows, and we kind of busted out of this in the last couple of days, and money's been flowing into bonds simply because there was panic in the market the last 2 days in the SP500, in the broad equities market, and that fear obviously spooks money out of the out of US stocks and into bonds, more of a safe play. Now you can see we got clear resistance right across here from this consolidation and breakdown. You can see it spiked up and got hammered again, but overall it may be trying to put in a base, but this is still overall a bearish pattern that's forming, and the move is down, so this still points to potential lower prices, and that'll happen if the equities market really did find a bottom and starts another leg higher. We'll see bonds continue to fall. Taking a look at natural gas inventory numbers came out yesterday. We saw another sharp big percentage drop. It's working its way down. If we zoom out here, a little bit bigger picture, you can see we're starting to get that big three-wave kind of correction I pointed to, with potential 360, 350 downside move. If it does come down into that area, we might start to pay more attention to natural gas, but overall not really too keen on trading that. Looking at crude oil, it continues to trade up here. We've got a lot of resistance right across the chart here. If we were to just draw a simple line here, you can see we got a real key level, $95. It's a whole number, and we've got a lot of pivot lows. We've got some price action popping through it, a lot more pivot lows and a pivot high, and we're right back into that area now. We've seen price rise into this, a little bit of a rising wedge. It's kind of flirting around here, and this pattern to me looks as though we could actually see crude oil probably come back down to the 93, and if the overall broad market collapses, then we'll see it come all the way down to the 90. But overall, this little pattern here is showing some pretty good strength. There's lots of buying volume going on, so it might consolidate here for a bit. It is at resistance. I wouldn't be surprised if we see a little bit of a pullback, and then possibly for it to continue to go higher. Now, looking at the SP500 signal chart, you can see here the last couple of days the market has been flirting, starting to show signs of weakness at the technicals. The underlying technicals are starting to break down, and there's several different layers to that. Of course, when it goes orange, it could be one, it could be 4 layers starting to erode. Overall, right now it's just the 20-day moving average is starting to roll over, and we're trading far enough under it that the upward momentum is now going to have some resistance. So now when we do get a bounce up, we're going to find some pretty key resistance when we get up to this 20-day moving average, and that could actually lead to, depending how it gets up there, the speed it gets up there, we could actually see the trend reverse to the downside. Might be a shorting opportunity to go short, but right now we're still in a strong uptrend. We're oversold. We're down at a key support, filled this gap window right here yesterday. Panic selling cycles are bottoming, so it looks as though we're ready for either a strong leg higher or at least a multi-day bounce back up into this area up here. Now, looking at the futures of the SP500, here are the futures this morning. More or less, you can see we've had this three-wave kind of correction. We had 1, 2, 3. Yesterday morning we saw some more panic selling, high volume selling in the morning, and then in the afternoon we got this huge more or less big money started to step in and started to buy prices up. As it started to move higher and higher, you've got all these little minor pivot highs you can barely see on the chart here though. Stops started to get run. Of course, it starts to create buying, and we had a nice strong rip into the close. Now we've been forming this little bit of a bull flag in overnight trading. Nice tight consolidation. If this plays out, then we should see a simple measured move is, now again, this line here is the 20-day moving average, the daily 20-day moving average overlaid on the 10-minute chart. So you can see clearly where it runs. You can see how we hit it earlier in the week, sold off. This measured move here on this flag, you've got the low, you've got the high. You take that same measurement, low to the high, it brings us right up to the 20-day moving average. And that's kind of right where this previous high is also. And again, just looking at this volume, price by volume, we've got really high volume in this area where everybody who got long in here has been holding a losing position. When it gets back up there, they're going to want to get out at break even and just wipe their hands clean of that trade. So that's what's going to cause resistance at the 20-day at this previous high. Anyways, that's it for this morning. One other thing, just we could see the SP this morning, like it did close a little bit overbought yesterday. We are in an uptrend, so you don't want to short it. Overall, this is a pretty significant low, I think, in the market. Look how strong that move was, this flag. Now, a lot of times what we'll see is the market give back some of this move. Now, if I actually just draw on the chart here, let me just draw forward, just use a Fibonacci retracement. I'll just show you a couple things here. You take this low, you take that high, and if we just look at that, that should, if we see price pull back, it should pull back possibly this morning into support. The top of more or less this breakout right here, this previous high, this little bit of support, you can see this high volume zone. Well, that coincides perfectly with a 38 all the way down to a 61% retracement. So if we were to just draw a box there, you could see here, and that's a typical Fibonacci retracement right there. So that is going to be the sweet spot that if the market pulls back down there, then likely it's going to find some pretty good support and then continue to go higher. As the market, we know, never goes straight up. It goes up, pulls back, goes up, pulls back. Now if it does come back down into that area, we can grab another Fibonacci extension, and you would simply go from the low to the high. Say it pulls back to the 50%. So I'll just draw this one out here. And the simple measured move for that, this leg up, the calculations brings us up just underneath this 20-day moving average, so the 1637. So that would be the next real key measured move target on the SP500 futures. Now that being said, if the move doesn't pull back, if we see this tight flag and we see it just continue to extend, then simply you take the low, the high, and this low, which has already been put in place, and the next 100% measured move here is going to be right here, which is the 20-day moving average. And if we go back on the chart, it is also that high volume resistance zone. So right now the market is set up in a very tight flag. Looks as though it could pop up to this 20-day moving average where it's going to find resistance. Even if it does pull back this morning a bit to give back some of that strong move yesterday, overall it's going to come up underneath that 20-day and start to run out of its upward momentum, and sellers will start to, once it loses momentum, sellers will step on it, and we'll probably see it pull back again. And of course the market is a simple up down kind of type of pattern. Anyways, that's it for this morning. And actually, you know what, I'm just going to pull up the utilities charts and a couple other charts real quick here. We've been covering utilities, got down to that oversold territory. Things are becoming choppy, high volume. Yesterday we saw a nice pop. A few days ago, we saw a nice big green candle. It closed up showing there was some big money starting to rotate into it. Yesterday we had a nice pop. If we look at XLK, the technology, it has a nice reversal candle, which is tightly connected with the NASDAQ, which had a very nice reversal candle. Of course, the SP500 had a reversal candle. More or less, when one major index puts in a reversal candle, the other ones usually do also. Again, the Dow has got is like the Dow 30, so sometimes you get the odd big stock in there up huge or down huge, and it throws, say, the Dow opposite for the day. But overall, yesterday, very strong day in the market, strong buying volume, and very strong candle patterns that are showing the fact that we filled these voids, like this gap window right here. Again, gap windows are very important. They typically get filled, and usually the top of the window will act as support, so you'll get a bounce off it, but then if it breaks through it, usually that window gets filled very quickly, and then once that window gets filled, you see buyers step in and price goes up. So hopefully we see the equities market continue. I really like to see it make new highs and go parabolic straight up, because eventually it's going to roll over. So the higher it can make it now, the pullback won't be so bad overall later. It'll be a stronger pullback, but overall we've got lots of room for the equities market to fall because it has climbed so much this year, and we've got lots of cushion for it and support zones for things to buyers to step in. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.